Hi there, welcome back. Let's keep it going with all the big buzzers in today's trade on Market Fatafat. And now on the technicals, we're being joined by Vaishali Parekh, the Vice President Technical Research at Prabhudas Lilladher. And from our research team, Jinay joins us on the show now. Thank you so much, both of you, for taking the time out and joining us. Vaishali, I'm going to come to you. You've picked out your first stock as HAL. Now, over the last 1 year, this stock has been a doubler. In fact, it has more than doubled. Do you think this momentum will sustain on the charts, or now is it time for some consolidation, some kind of slowdown? What are the levels you're spotting?
Yes, hi. So actually the point is HAL has really given a very good run-up. And in the recent past, we've seen that the stock has been consolidating and taken support of the 200-day moving average. So 4,100 acts as a very good support from here on. And I think it is a buy at every decline with 4,100 as support. To look for a positional target of 4,600 to 4,800 to start with.
Alright, that's HAL on the charts, but moving on to GAIL, that's in focus today. In fact, the stock was up, soaring away almost 7% in trade today, has given up those gains, but nonetheless is trading with gains of more than 5.5%. But the results have actually missed the street estimates. But why is the stock really buzzing? We'll talk about that. But let's take a look at the results first. The net profits are down 1.9% on a sequential basis at 2,671 crores. The net revenue is also seeing a downtick of 2.3% on a quarter-on-quarter basis. The EBITDA is down 17.3% on a sequential basis, and the margin is also seeing a downtick of 207 basis points of 11.4% versus 13.4% on a quarter-on-quarter basis. But despite this miss on the Q2 results, the brokerage remains bullish on GAIL shares on the back of the company's new pipeline expansion plans. Now, the global brokerage Jefferies has upgraded its rating on the stock to buy with a target price of 240 rupees, which means it sees a potential upside of 22% from the closing price of November 5th. Now, the brokerage noted that the company's EBITDA rose 7% on a year-on-year basis, which was marginally below what the analysts were expecting on better gas transmission and petrochem offsetting against the weaker trading. Now, the firm's new pipeline are driving the market share gains. Jefferies asserted, adding it is seeing a continuing as more pipelines are commissioned by the mid-calendar year 25. And on the back of this bullish note, GAIL is buzzing away in trade today.
Let's shift focus, talk about another big buzzer in today's trade, and the stock is up 9% as we speak, and that is CCL Products. It's an earnings candidate. Jinay, take us through what the earnings fine print is and why the stock is up so much today.
Very good set of numbers by CCL Products. If you look at the revenue, it saw an uptick of 21.5%. Also, the net profit soared the same 21.5%, coming in at 74 crores versus 61 crores a year-on-year basis. Also, if you look at operationally, then EBITDA has outperformed both the top line and bottom line by gaining 25%, approximately coming in at 137 crores versus 110 crores a year-on-year basis. And if you also look at margins, there's a slight improvement also seen in margins front, as EBITDA margin came at 18.6% versus 18.1%. So overall improvement across all the metrics. Well, the company also were earlier on ET Now, where they said that they are maintaining the guidance of their volume guidance of 10 to 20% for FY25, and they're actually looking to close their India business, which is a branded business, with a revenue of 300 crores in FY25.
So much for taking us through that. Let's talk about a stock that's holding up smartly for itself. And in fact, it's been gaining since morning, and that is RVNL. Also, right now, the stock is up roughly 4% as we speak. Now, consortium led by Rail Vikas Nigam and also comprising of HFCL and Aerial Telecom Solutions Private Limited has bagged a project worth more than 5,000 crore rupees from BSNL. This is what an exchange filing showed late last evening. The consortium has emerged as the lowest bidder for the 5,008 crore project that involves development, creation, upgradation and operation and maintenance of the middle mile network of BharatNet, RVNL has stated in the regulatory filing. Now, other than this, the company has also won a construction project worth 613 crores from the Rail Infrastructure Development Company, Karnataka. Additionally, another joint venture led by RVNL emerged as the lowest bidder for an Eastern Railway contract worth 837.7 crores. This is what the company had announced earlier yesterday as well. So one order yesterday, two order wins coming in as announcements late last evening as well. So multiple order wins coming in for RVNL. Stock is also holding up pretty smartly as we speak.
All right, moving on from RVNL to HCL Tech. HCL Tech is what you picked out for us, Vaishali. Tell us what you're seeing on the charts. This one's given some good returns over the last 6 months, 35% gains in the last 6 months. And right now, I think it is heading towards its 52-week high. Do you think, what are the levels for this on the charts? And is will it touch this 52-week high?
So overall, we are seeing renewed strength in IT sector, and HCL Tech is one of them. So I think in all likelihood, we have a projected target of around 1900. So hence we have also recommended this in the morning to our clients. I think they should do at least 1880 to 90.
All right. That's HCL Tech on the charts, but IHCL is another counter that is in focus today. In fact, it's trading with gains of over 1.5% right now, and it is on the back of the fact that they have announced the acquisition of a majority stake in the Tree of Life's operating company, partnering with the Ambuja Neotia group yesterday after market hours. Of course, the move strengthens IHCL's position in the experiential leisure segment. IHCL plans to expand the Tree of Life portfolio from its current 19 properties plus 2 under development to 100 properties by 2030. Now, the brand operates in over 15 destinations, including offbeat locations such as Dare, Dehradun, Varanasi, Binsar, Kumaon, and Udaipurwadi. And also, the acquisition deepens IHCL's existing partnership with the Ambuja Neotia Group, with whom it's already collaborated on 7 hotels and resorts, including the Taj Chia Kutir in Darjeeling and Taj Guras Kutir in Gangtok. Now, Puneet Chatwal, who is the MD and CEO of IHCL, also cited growing demand for experiential leisure as a key factor in this acquisition. And on the back of that, IHCL is a buzz, trading with gains of 1.5% right now.
IHCL in focus on the back of this news flow, as well as the earnings are going to be released tomorrow, so watch out for that. But Vaishali, you've also picked out IHCL on the charts. Now, this has been a consistent performer, at least on the charts, and over the last 6 months, 1 year, 1 month, the stock has performed well. What is your outlook going ahead, and do you think this positive momentum for the stock can continue?
Yes, today we were observing the stock and it was picking up momentum. So I think this needs to cross 685 on near-term basis, and once it crosses 685, I think it's ready for the recent high what we witnessed of 720. So I'm bullish on this stock. We are seeing some strength coming in, but it needs to cross 685.
All right, moving on from IHCL to Dr. Reddys, that is also an earnings candidate. Jinay, tell us what does the earnings look like, and of course, a brokerage note has also come out. Do tell us about the brokerages, what the brokerages are also saying about the counter.
Well, yes, if we talk about earnings, the revenue definitely came above the expectations, whereas the PAT saw a slight miss. Well, if you look at the revenue, it saw an uptick of 16.5%, coming at 8,016 crores versus 6,880 crores. Also, the net profit that saw a downtick about 15.3%, coming in at 1255 crores versus 1482 crores year-on-year basis. And if you look at operationally, then the EBITDA was up 8%, coming in at 2,147 crores versus 1,991 crores. And the margins also saw some pressure because they contracted about 2%, coming in at 20.8% versus 28.9%. So there is a downtick on margins as well. Apart from this, the company also approved an investment of 600 crores in a wholly owned subsidiary which is situated in Russia. And apart from that, we also have a brokerage note from BofA, who have maintained a buy rating with a target price of 1530. They said that it was on all grounds the company drove the EBITDA beat. Also, there was a notable update on core growth drivers for the company, and on back of this, Dr. Reddys remain in focus.
Okay, so Dr. Reddys is in focus on the back of those earnings as well as brokerage notes. Let's talk about another stock that's in focus on the back of a brokerage note that we've just received in the middle of the day today, and that is LT Foods. Now, the stock is up almost 4%, in fact more than 4% as we speak. It's been gaining momentum ever since we've got this note from Motilal Oswal, where they've initiated a buy rating with a target price of 520 rupees, indicating an upside of 36% from the current market price. Now, according to industry reports, Basmati rice accounts for roughly 4% of the global rice market. Basmati sales are likely to experience 9% CAGR over FY24 to 32. And basmati rice, while comprising only 4% of India's domestic consumption, drives significant exports revenue. LT Foods is what Motilal Oswal believes is the key Indian player and stands to gain with increasing penetration of basmati rice globally. LT Foods has achieved an impressive 17% CAGR in international revenue over FY19 to 24, and its strategic expansion in the US and Europe will drive growth, while the Middle East has rebounded with a remarkable 26% surge in FY24. Now, Motilal Oswal estimates a 14% CAGR in total revenue during FY24 to 27, supported by new product launches, penetration into existing and new geographies, and strategic partnerships. Hence, they have initiated a coverage with a buy rating, target price at 520 rupees per share.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we are getting you stocks that are in focus today very shortly. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. So let's resume. Vaishali, you picked out Zomato for us. Now, this stock has been, giving some very good returns. But in the last 1 month, from some 200 to 70 odd levels, it has, seen a bit of a correction coming in. Do you see now the stock moving up, resuming from here?
So the long-term trend is intact, and we saw a little bit of profit booking coming in, but yet there's no damage to the trend. So I would say the view gets negated below 235. So for now, the way it is holding on, and with today's volume, we are seeing that new round of momentum is setting in. So I think it's a good buying opportunity with a stop loss of 235 to look for a target of 300.
300 is the upside that Vaishali is spotting on Zomato, a good buy call coming in. But while we're talking about Zomato, we also have to speak about Swiggy, because that IPO has opened today, and food delivery aggregator Swiggy is all set to open for public subscription. We spoke to Rahul Jain, VP Research at Daulat Capital, to understand his take on the much awaited IPO. Let's go across and listen into his views.
This point, it is clear that they are behind the curve in terms of improving the profitability of the business, which is an important element for valuation. And competition in this space is actually heating up. So there's not much talk about, not much debate on that element. And thus, in that absence, it becomes a difficult call to make. But if we go by whatever limited information we have, limited roadmap we heard from them in their IPO interaction and the interview, I think for us it looks like a fairly priced IPO. Don't see much downside from here, but don't see anything great actionable upside here as well. The real question, as I said, is the timing of it. They've been doing well, and they should, on the food delivery side, should shape up on the positive direction, as we are seeing in case of Zomato as well. I think the question remains a concern, both even for Zomato for that matter, that how the profitability metrics should behave in the quick commerce business, because that's where there is a mega expansion plan into play, and there is a lot of competition also that is hitting up. So that remains a concern and could be a key driving factor for the valuation in both the companies, Zomato as well as Swiggy.
Okay, on that note, let's shift away from Swiggy, talk about Hero Motor. This stock is also doing decently well for itself today. Hero MotoCorp yesterday said that it is planning to enter the Europe and UK markets from the second half of 2025 as it looks to further consolidate its presence overseas. The company will enter the markets riding on a new electric scooter, the Vida Z. Subsequently, the company plans to expand its range to the high capacity premium internal combustion engine, which is the ICE motorcycles as well. Now, the two-wheeler major has also unveiled 3 new motorcycles, the X-Pulse 210, the X-Pulse 250R and the Charisma XMR 250. So, well, on the back of these international expansion plans and the 3 new launches, the stock is holding up decently well for itself, up almost 1.3% as we speak.
All right, moving on to the next counter, PB Fintech share that is also holding on smartly to the gains, 1.8% in trade. It's an earnings candidate and a bullish brokerage note coming in there for PB Fintech. Janai, take us through the note and the earnings.
Well, definitely. Let's start with the earnings. So if you look at the revenues, it grew about 44%, coming in at 1,167 crores versus 812 crores year-on-year basis. So quite a good jump over there. And if you also look at the profit has turned. The company has reported a profit of 51 crores this time versus a loss of 20.25 crores last year during the same period. So that's the company turning into profit. Also, if you look at the EBITDA, that there also we are seeing shortening of the EBITDA losses. The company has reported a 7.79 crores of EBITDA loss versus 89 crores. Apart from that, we have a note by Investec on PB Fintech where they're maintaining buy rating with a target price of 1750. What they say, there's a strong revenue growth which continues. Also, the higher OPEX impact the PAT. That is why we are seeing PAT impacting a bit. Also, the contribution margins of the business has reduced year-on-year basis.
Okay, Janay, thanks so much for taking us through that. Vaishali, you've picked up Paytm on the charts, and it's an interesting looking chart, right? Because the stock has been sharply consolidating from that big fall that we saw initially. But in the last 6 months from that fall, the stock has doubled itself, currently around that 800 level. What are the levels that you are spotting for this one? And do you think now it's time for some recovery on the charts for this stock?
Yes, it has crossed the previous high, and I think the volume also has been very good. So I think the stock is ready to go towards higher targets of 850 to 900. So we have recommended a buy on this stock.
Okay, so buy rating coming in on Paytm from Vaishali, but let's move on. Talk about Manapuram Finance. That's also an earnings candidate. It's a rather disappointing set of numbers coming in, or optimistically speaking, it's a mixed set coming in, because you have some metrics that have done well, but some have not performed very well in the quarter gone by. If you take a look at the net interest income, that has come in at 1,727 crores, which is up 17.4% year-on-year. Operating profit is also up 19.2%. When you take a look at the net profit, however, that has seen an uptick of only 2% on a year-on-year basis, coming in at 572 crores compared to 560.7 crores year-on-year. Total AUM has gone up by 17.4% as well. However, the cost of borrowing has slipped very nominally at 9.2% compared to 9.3% sequentially. It's the asset quality that has not done well in quarter 2, because if you take a look at GNPA, that's gone up by 4 bips. You have that coming in at 2.4% versus 2% sequentially. NNP has also seen an uptick at 2.1% versus 1.7% sequentially. Also, the company's subsidiary, which is Asirvad Microfinance, has fallen in net profit. The profit is down 36.6%, coming in at 75 crores versus 118.3 crores. So overall, it's a mixed set of numbers, but the asset quality that has not done well for the company as of now in quarter 2, and that's the reason why the stock is under pressure. But it was a weak set of numbers coming in for Manapuram, and like we mentioned, the asset quality has deteriorated. Let's go across and take a look at what the management had to say.
Decided to reduce the interest rate for the microfinance, which would be one of the lowest in the industry. We have also rectified all the deficiencies in our system to ensure correctly assessing the income of the borrowers, capturing and reporting of income and indebtedness for the borrowers from CAC system. Asirvad has submitted a plan for compliance to RBI on 29th of October 24. We are hopeful of lifting the ban on disbursement at the earliest.
Alright, moving on from Manapuram Finance, an earnings candidate, to another earnings candidate, Benar Pain. Tell us, what does the earnings look like for this counter? This one's doing pretty well in trade, but I believe the results are not that great. Take us through the results, Janay.
Well, definitely Benar Pain currently trading with the gains of over 1%, but if you look at the results fine print, the revenue saw a flattish note, seeing an improvement just slight of 0.3%, coming in at 2775 crores versus 2767 crores year-on-year basis, whereas the net profit declined about 7.5%, coming in at 270 crores versus 292 crores. Also, if you look at operationally, then the EBITDA margins also declined about by 1.5%, and EBITDA also declined by 8.3%, coming in at 434 crores versus 474 crores year-on-year basis. Apart from that, the company reported that the flat top line was due to the extended monsoon and the flooding in some key markets, and growing ahead they have a quite positive commentary as they're expecting a double-digit volume as well as value growth in a second half. Also, EBITDA margins is something which is likely to significantly improve in H2 is what company is saying.
Nice. So thanks for taking us through those numbers. Benar Pain's almost 3% up as we speak. But on that note, it's a wrap on Market Fatafat's this edition. And Jinay, Nagraj as well as Vaishali, thank you so much for joining us. But as we bid you goodbye, closing trades takes all the action forward. So you stay tuned to ET Now.